So we're at the verge of some pretty big price action in gold. And the question is, does the dollar get rejected and metals put in a bottom and start to rally, or does the dollar pop and take off and precious metals fall out of favor for a few more months?
This week's special with Miles Franklin Precious Metal Investments. $20, $10, and $5 gold Liberty coins. A true piece of Americana. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Yeah, thanks for having me, Elijah.
What is happening in both gold and silver, kind of on the weekly charts? We've seen quite a pullback in the last couple of weeks and an amazing amount of demand at Miles Franklin. So your perspective on what is happening on a technical level?
Sure. Yeah. Well, I'll share my screen so you can see what we're looking at here. And this is the weekly chart of gold. And the weekly chart really gives you a good perspective as like an investor who's buying physical metals, because typically you're not flipping your physical metals to make quick profit. We're in this to hold for obviously an insurance plan in terms of chaos hitting the world. But when you look at this chart here, you can see it goes back 2019 is when gold broke into a bull market and really started to take off. And this has formed a really nice bull flag pattern where price has rallied up and really it broke the 2011 highs. And now we're kind of consolidating, in this sideways channel, this large bull flag pattern. And a bull flag pattern is known as a halfway point. So based on this rally up and this bull flag pattern, we're looking at much higher prices later next year. I don't think it's going to happen this year, but next year we should see $2,600 plus gold. And we just need to let this pattern play out. Again, this is the weekly chart, so it really gives you a good long-term view. Right now, gold is still flagging down. It's struggling to get some traction, and maybe it's going to go a little bit lower. Maybe will go down to 1,700. Maybe it'll go down to 1,650 or so. But overall, this is a really strong pattern. If you're a short-term trader of metals, then the bias is to the downside right now. But long-term investing, this is pointing to dramatically higher prices once this multi-year pattern unfolds all the way.
As for silver, your perspective on that long time period of consolidation we've been seeing?
Yeah, so silver is actually held up a lot better than gold because gold's been making lower lows month after month, whereas silver really is still testing the lows from back in August, October, or July of last year. So silver's holding up really well still. It is at the lower end of the range here, around 22. If 22 can't hold on the weekly chart, we could see a pretty dramatic drop. Maybe we're going to see it go down to 17 or 18 or 1850 or so. But overall, this pattern is still a very bullish pattern. We've had a strong run up. It's consolidating. It is at the lower end of the range. Technically, it's at support. And if this continues, this range-bound price action, we would actually see silver find a bottom here and then work itself up to the upper end of the range. And that is actually a pretty big move based on where it is right now. The upper end of the range is, let's just see here, the upper end of the range is going to give us, let me get a proper tool out here, roughly 25% move in silver just for it to get to that level. So there's a lot of potential here, but this $22 per ounce for silver is very critical. If it starts to break, we might see it flush down and have a big shakeout before it has a knee-jerk reaction back up to the upside. So I like silver, but it's definitely on that tipping point that it could have a little bit of pain short term if that level is broken.
And what would be some signs that level would be broken?
Yeah, basically we'd be looking at just the price of itself closing on a weekly close below 22. And we'd probably see gold and silver miners underperforming as well, which is a little bit of a concern because gold and silver miners are underperforming and they tend to lead silver. So that's why I'm a little bit hesitant down here at silver, just because we're seeing those leverage plays on the commodity are actually still being sold off in general, and people aren't committing really money to the sector right now. So right now, when it comes to precious metals, I'm just more or less neutral. Just let the market stabilize. Hopefully it finds a bottom, and I'll be looking to accumulate more when I actually see a bottom put in place. It starts to move higher. I think long term, it's got a lot of potential still, but short term, it could have some downward pain here if it closes below 22.
And you mentioned how there wasn't much activity in the sector. Your perspective then on why, at least on the physical side, there has been a lot of buying, especially when we see the price fall.
Yeah, I mean, I think a lot of people are really concerned, like there's like no supply, it seems, of physical metals. And I think that's creating a little bit of a feeding frenzy. I mean, when you can't get something, it typically makes it more wanted. And so, I mean, that's just the feeding frenzy right now. I mean, the premiums on metals are still really high. And I mean, if you're going to own anything precious metals, the best thing is, in my opinion, to own physical metals, because you've got it in your hand. It's real. It's legit. It's not some paper contract or something traded on the markets that that can be manipulated in some way, or it might not even be there in reality. So I think people realize that physical, having it in hand, is one of the best things that you can do. And we typically see commodities start to do really well near the end of a bull market cycle for equities. And while I still think there's potentially a lot more upside in the stock market in general, I think there's another 15 to 30% potentially. I think this is when we're going to start to see the precious metals and the miners actually come to life late this year or early next year, and really start to lead the way. And commodities themselves, physical commodities, tend to start to perform better. And I think that's starting. We're starting to see some of that demand. We're seeing crude start to move higher. Gold and silver both down at support levels. So I think we're getting really close to a very strong move in physical commodities, which people want when they become uncertain about things.
Speaking of the commodities, some of the precious ones are also platinum and palladium. It's very interesting because platinum is still below gold's price, and it just keeps falling, and it's fallen along with gold and silver as we've seen this pullback. Where do you think platinum is standing right now?
Yeah, so platinum's right down into this kind of high volume level. So this level here, this kind of spike low, and this last few trading, these last weeks in platinum, it's really in a range that's had a lot of volume traded through it. If we were to just kind of box in some of this price action here, you can see there's been a lot of trading through here. We've had highs and lots of consolidation. Price keeps going into this area, so that's naturally going to act as a support zone. We did see platinum break out, started its first run. It kind of formed a bit of a long bear flag here, and now it's flushing down, but it is into support. I do think a lot of commodities here are at support, which is pretty interesting. Gold, silver, platinum. We'll look at palladium in a minute, but I think the precious metals market is very close, just months away from actually turning around and potentially starting their next mega run. So I really like platinum down in this level. This is a key support zone, very much like silver. If it breaks this level or breaks this low down here, if it was to break this low down around this area, around 822, potentially 840 something, if it closes below there, then we could see a double dip. And that's a possibility as well. But right now we're seeing most of the precious metals testing support, and that's usually a sign that that sector's ready to bottom. So we can take a look at palladium real quick. Palladium definitely has kind of really picked up speed in the last little bit. And sometimes the biggest moves happen right at the end of a trend. And if we look at this pullback, it's been a 5-wave correction. And usually markets move in waves of 5. You've got 1, then you got 2, then you got 3, and then you got 4, and then you've got 5. And this last one here was a big drop. It broke a lot of these lows, which is why we're seeing a big spike in volume. A lot of people who had protective stops in place said if it broke this low, they want to get out. If it breaks any of these lower lows, they want to get out. And so that's telling us stops are being run. People are panicking. They're giving up on it. And I think we're coming right back down into a pretty major support level also for palladium. And it's oversold with a 5-wave correction. So precious metals sector is starting to look pretty interesting. In fact, there's an ETF that actually allows you to take advantage of all 4 of those. GLTR is a way that people can actually play a mix of all of those precious metals together. It's obviously a totally different looking chart, but you get that blended look as well. But really nothing really beats, especially this scenario we're in with all the printing and and all the manipulation going on in precious metals, physical as a long-term investor is by far the best play.
And so even Palladium in your mind is a good buy right now, because it does look kind of oversold right now?
It depends on how you're looking at it. I don't buy anything that's in a downtrend. So right now, this is in a short-term downtrend. The last several months, it's been trending down. I don't try to pick a bottom. I will eventually wait for some type of bottoming pattern. It'll take probably several months here, and then we'll probably start to see it. If I was to draw on this chart, probably start to see some type of rally and some type of pullback and a rally and pullback, and it's got to start to break kind of like some resistance levels and then hold above it, and it'll build like a launch pad that eventually it'll start to kind of climb its way out of here. I don't really typically get involved when something's in free fall mode because you really do. You never know how far it's actually going to fall. So I wait for it to stabilize. Just after COVID, right? We had this massive collapse. I mean, a lot of people were picking up when it was here. They thought this was the low, and then they thought this was going to be a low somewhere over here. It just kept falling, and it completely collapsed. So you got to wait for that rebound. You've got to wait for it to build a launch pad and then start to break those levels with a series of higher highs and higher lows. And then you can get into it, and then it can have that second half of that move. So that's what I'd be looking for. But as a long-term investor, this is back down kind of in a high volume level from back here, and it is at a support zone. Typically, as an investor, you'd be buying these dips. That's what you want to do. But as a short-term trader, I wouldn't just jump into it yet. I'd wait for that trend to fully reverse to the upside.
So essentially, if you're accumulating precious metals, right now is probably a good time to dollar cost average.
For sure. If you're as an investor, anytime gold, silver, or whatever it is you're investing in is down at a support level, that's a great time to buy. If it bounces and continues to go higher, great. If it breaks down, well, you already bought it at a discount from where it was previously. You can always, cost average down over time as it pulls back even more. But you definitely don't want to be buying it on these giant rallies in price when everyone's chasing it. You want to be buying it when it's out of favor, like these lows that we are at now as an investor.
And one of the things that we like to keep an eye on is the dollar index as well, because that can kind of be an inverse of the precious metals in a sense. When the dollar is strong, then that is bad for precious metals and vice versa. Where are we right now on the dollar index?
Yeah, the dollar index, this is the ETF that follows it. Now, it doesn't follow it quite as cleanly as the true index, but the reality is it's trying to put in a bottom. I think we've got a double bottom formation here. This is very much so seen as a bottoming pattern. So you've kind of got this key resistance area. You've got this W formation, and now it's been flagging sideways, trying to eat through here. At any day here or any week, because this is a weekly chart, we could see the dollar. We're testing right at this resistance. So it could pop and start to have a pretty good rally. And if it does rally, we're going to probably see precious metals have one more drop, one kind of flush out low. It's going to spook the whole precious metals market. There's going to be a lot of selling, and it'll most likely be a very big buying opportunity long term when you look back at it. But we do have to be very aware what the dollar is doing. It is at resistance, and this goes just what I was telling you with precious metals. All precious metals are at support. The dollar is at resistance. And so if precious metals bounce, that means the dollar gets rejected here at resistance and falls. But if the dollar breaks through resistance here, it's going to make precious metals fall through their support levels. So that's why we're at this really critical point. And this is a weekly chart. So these are very powerful patterns. These are big patterns. So we're at the verge of some pretty big price action in gold. And the question is, does the dollar get rejected and metals put in a bottom and start to rally, or does the dollar pop and take off and precious metals fall out of favor for a few more months? That's the big question. That's where I think a lot of people are kind of waiting to see what's going to happen, including myself.
Definitely. Now, I guess when it comes to trading versus investing, if you kind of want to remind our viewers kind of the two different approaches we need to have, because this, as you mentioned, is a very key turning point. But for the average investor, right now is a fine time to buy physical precious metals.
Yeah, there's a big difference. And that's why I'm trying to differentiate the difference when I say, as a trader or as a long-term investor, because a lot of people always think you're talking about their time frame, whatever they are. If they were a short-term trader, they think I'm talking in those terms, but really I'm talking in an investor term or vice versa. And people are like, well, you said it was going to rally. And, I'm like, well, I did on the short term, but long term, so the big difference is really as a long-term investor, think of buying physical metals. It's not something you plan to sell probably for many years. I'm buying it, not expecting to sell it for probably 3 to 5 or 10 years. It is not even a thought of selling precious metals at any point. It's just accumulate them. That to me is an investor. You want to buy it on these dips when you can get good value. And then more or less a short-term trader is someone who's looking at these trends and they want to make some money this month or over the next couple months. They want to get in and catch a rally, or a drop in the market, however aggressive they are. And the short-term traders are really only looking to probably be in trades, the patterns I look at, for only a couple of weeks. You get in, you get a move, you get out, you go find another one. So there's a very big difference between them. And investing can be a buy signal, short-term can be, a sell short signal. So you can have two very different signals, even though the chart's, it's the same chart. It just comes down to your time frame. So as an investor, we are in a prime time for accumulating precious metals. They're at support. They're all pretty oversold. And you might be able to pick them up cheaper later, but this is definitely a prime time to add some to the stacks.
Now, one of the things that people are looking to protect themselves against is a crash in the stock market. And some people are very concerned about recent price action. We saw a bit of a pullback in the stock market. Now we're seeing a rally again. Are you concerned of a stock market crash in the near future?
Well, there's a big turning point in the stock market. Obviously, just like precious metals, it could go either way, very big here in the near future. I can actually just quickly show you what the Russell 2000 is doing, because it actually paints a really good story of what the stock market is potentially doing here. So if we look at the Russell 2000, this is the weekly chart, and really almost all of this year, it has been trading in this range. Very strong rally. Last year, we saw that huge move in some of the sectors rallied 200+%. And when the Russell 2000 is in rally mode, that's when sectors are running huge. This year, it's been trading sideways in this tight range. If the Russell 2000 breaks to the upside, we could see a potential 25-30% rally, because again, a bull flag pattern is just the halfway point here. And we can measure that using Fibonacci extension. We can go from the highs down to these lows, and the Russell 2000 has potential from where it is to rally about 26-27%. And if it breaks to the downside, though, we could see a very big stock market correction, a crash like you're talking about. And the crashes we've seen in the last, really the last several years, every time we see a crash, they're like a flash crash. They happen so fast. And that's the problem, is if you're not on it, you don't have stop orders in place to protect you. In 1 or 2 days, it could have dropped so far that it almost doesn't make sense to sell it anymore, or it's tough to sell it, even though you should exit losing trades. This market is very, very close to a huge rally or to a very big drop. And so we're watching this. And I think the next 6 months are going to be huge in terms of stock market and precious metals volatility. Which way is everything going to break out? We're really just kind of sit and wait scenario. The bias is to the upside, believe it or not, for both of them. Gold, precious metals are in bull flag patterns. The Russell 2000 is in a bull flag pattern. Both of them are on major bull flag or bull markets. So the odds are it's going to resolve to the upside. So I still think based on that long-term view, that I think we're going to see some type of bigger crash. It'll be next year, potentially after the markets have all risen pretty substantially still.
Chris Vermeulen, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
Sure. Yeah. More or less, they can follow me online at thetechnicaltraders.com. And from there, I cover kind of everything you and I did, but more on a granular level. I cover a lot more sectors and commodities each day before the opening bell, talk about what should happen today, where price is going, and share my ETF trade alerts with everyone. And we cover sectors and indexes and bonds, and we just actively trade them and together as a group. So pretty good service. You learn and we trade together. And just be very cautious in terms of investing or short-term trading here, because there's going to be some big moves, and we just really need to see which way these markets are going to break.
Fantastic. Chris, once again, thank you so much for your time, and God bless.
Thanks for having me. Take care.
This week's special with Miles Franklin Precious Metal Investments. $20, $10, and $5 gold Liberty coins. A true piece of Americana. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.